Jay Woods, my
Hey,
man,
what's up,
live
guys?
from the New York Stock Exchange. I like it. I like it.
Fancy. Hey, Jay.
Where else would I be? Where else would I be? It's good to see you guys. First of all, I'm not here to plug anything, but I come in with that stock, the charts, your daily update that you guys send out, the chart report. Patrick does a bang up job, and that is, if you miss something on Twitter, he just goes through everything, and you find the most important charts that, will not only explain the day, but will shape the rest of the week. So shout out to you guys for that product. It's fantastic. And it's free. What's better than free?
I appreciate that, Jay. Quickly, what is your favorite thing about the New York Stock Exchange, the building itself? In that building, what's your favorite part about it?
Well, I mean, the bell is fantastic. The Buttonwood Agreement, you can't go wrong. Lunch is a great thing that we do here. The ceiling is epic. So I can't give you one thing. I walk in every day, and I know it's a special place. I get excited talking about it 31 years later, and there isn't one thing, because every time you walk in, there's something new, whether it's Kramer blowing up on the set, or some stock move in the market, or headlines that are disastrous, and us making 8-month highs in the S&P 500 and the NASDAQ 100 breaking out the new highs, and everyone saying gloom and doom. This is what's exciting about coming into this building, having those conversations.
Jay, this is really cool. They allow you to do this. You're going to have the compliance department on your ass or something for doing a live video from the floor of the exchange with us?
I'm doing it from the balcony. There's a big difference. If I was down on that floor, yes, we would be on a professional camera and everything would be good. And we could probably arrange that too. It's not, you guys, this is a professional network. So, of course, I'll probably soon be broadcasting from the floor, but I can concentrate a little easier up here and, really focus on what we have to talk about.
Jay, listen, we really appreciate you being here on the best morning show in finance. Thank you for being here. I'm gonna throw it out there. My favorite thing about the New York Stock Exchange is the Buttonwood Agreement. Like, come on, like that is like, you're right. Like, potentially the most important document on earth. The New York Stock Exchange, I have said it time and time again, is arguably the most important building on earth in terms of what it represents. So just awesome. Okay. With that being said, enough New York Stock Exchange talk.
Yeah.
Talk to me about the sentiment, right? You just alluded to, S&P's making new 8-month highs, NASDAQ making new 52-week highs. The gloom and doom continues. Like, what's the word on the floor? Is it as gloomy as you're hearing on Main Street, or are they a little bit more optimistic because they follow price a little bit more?
Yeah, the mood is kind of boredom because we're not getting a lot of volume behind the price action. We're going sideways, which, as we know, is a direction, and we're waiting for that catalyst. The headlines, you talk about sentiment, are awful. Every headline skews negatively. We're still waiting on this debt ceiling. Okay, everyone focuses on 2011. We know what happened in 2011. We know we defaulted on our debt. I don't think it's going to happen. And guess why I don't think that? Because the market's telling me it's not going to happen. There's going to be an agreement. And guess what? If it does, if we have that washout day, maybe a great buying opportunity. There are several support levels right below the surface that to me are, good buying opportunities. So mood on the floor is just kind of boredom because we're not going to get that catalyst to break us out with some strength. But if we do break out, if we can close above 4,200 and, say 25, we're going to those August highs from last year. That's 43.25. That's not a big move, but this is, this is all positive. And, when you start bear market, or when you get out of bear markets, bull markets tend to be very boring. If you don't have a V bottom, you have bases. And what I'm starting to see, a lot of bases and, a lot of lower highs. And this is positive, but it doesn't make clicks. It doesn't make headlines.
And not just a lot of bases, but how are these bases resolving, Jay?
They're resolving to the upside, the prevailing trend.
More and more of them.
And what is the prevailing trend? It's now up, and people don't realize that, and that is good. Now, there are certain sectors that are lagging, but I think you hit on it before I joined, were the financials. They broke some recent intermediate downtrends, and they stopped. If you look at the bank indexes, the KREs and the KBW bank index, look at that March 4th low and the reversal we saw on Cinco de Mayo. I think those are the lows, and I'll stand by that right now. And then PacWest headline today, it's up 3%. It's up 3%. The headline read something about some loan they sold off in Kentucky. Okay, no, it's up 3% because it didn't go under this weekend, and they're all finally rallying because they were so overdone to the downside. Does that mean another bank won't go under? Sure, maybe they will. But overall, the index was flushed out. It looks like we're going to resolve at least some sideways action, constructive, and it's going to be bank by bank instead of taking every single one down. And then you look at some of the individuals in the XLF, or you want to go big cap, we're seeing constructive bases. You look, Wells Fargo's looking good, JP Morgan's looking good, Goldman, there are a few under that 200-day moving average that have a little more room to run, and we could see a little bit of sideways action. But it's not going down anymore.
I mean, Jay, does this not seem like the classic, markets just climbing a wall of worry? It seems like news is getting more and more negative, yet the charts and the price action is getting more and more bullish. We're seeing more and more of these reversal patterns break out, yet people don't want to believe it. So,
well said. Yes, we're climbing a wall of worry, and that is historically a good thing to do. And we're not running away, slightly overbought on a very near-term basis in some of these indexes. But then let's talk about the Russell. Is anyone talking about the Russell? All right,
we've been buying it.
Oh, okay. Okay. I haven't been listening. I apologize.
Risk reversal on the IWM. Go big or go home, Jay.
All right.
Go home.
Well, exactly. And if you follow Jeff Hirsch, like I know you do, seasonally, this is the strongest part for this season for the Russell. And then think about why. This he doesn't talk about. Russell reconstitution is third week of June. So it was just announced last week how they're going to rebalance the index. So people are buying certain stocks, they're buying the strength, they're selling the weakness. And then Seasonax, a friend of ours that we met at the CMT symposium, Taya, she sent me this great data over the last 10 years. Now it's cherry picked data because if you go back 15, it doesn't really back it up as strongly. But over the last 10 years, from that third week in May to that first week in June, the Russell's been up 5.9%. So this is seasonally, and then throw in the Russell reconstitution, a very strong time for the index, and that's the one that's been lagging. So the rotation is starting to happen in the small caps. That's bullish. I'm sorry. I mean, my horns aren't thrown out of my head, but I can't jump in on with the gloom and doomers right now either.
I want to point out this whole thing, they're trying to raise the roof, right? This is coming up now in the next couple of weeks. When they're comparing to the debt ceiling situation in 2011, but if you recall, stocks had already been falling way ahead of any default or debt ceiling nonsense. That was just the excuse that they were using in the gossip columns, and now they're recycling that again. But if you go back, European equities had already peaked 6 months before any debt ceiling, or 5 months before any debt ceiling, and we're already rolling over. We're seeing Europe breaking out to new 52-week highs. We're not seeing that at all. So you could be my guest and compare the current market environment to what we were seeing in 2011, but it's apples and oranges. This current market environment looks nothing like that other one.
I can't agree more. In 2013, we had debt ceiling issues, and they fought over Obamacare. There's always a topic they fight over. It's political posturing. The S&P 500 was up 3% during that whole debate when it was the end of the world in 2013. So they harken back to the worst possible scenario, and you are correct. We didn't sell off until after it was resolved, and that was a China issue, if you recall, and we got our debt downgraded after the fact. So yes, and then emerging markets, oh my God, we didn't even talk about Japan, 30-year highs. The DAX is making new highs. Nifty 50 is chugging along just
Denmark, France.
Yeah, I mean,
and then also another thing I want to point out, Jay, is that the S&P 500 doubled going into 2011, and then started rolling over before any debt ceiling. The market has, not only has it not doubled, we're coming out of a bear market. It's totally different.
So I'm a lot less worried about what Congress is doing, what these idiots are fighting over with this debt ceiling, and I'm a lot more concerned about what the Fed is doing. You're plugged in, you're talking to traders, talking to people on the floor all day. What is the read on where rates are going from here? What are people really expecting from this next meeting? Because Fed funds futures have been all over the place the past month.
They have been. I mean, 3 weeks ago, they were talking about cutting when the regional banks were going down. That would have been a disaster. That would have been a panic move, and we would have sold the hell off if that happened. Now they're getting a little more hawkish in tone. I think it's 40% chance of a quarter-point rate hike. The sentiment here is they're doing nothing. Jay Powell has always been a man, of his word, except for the temporary inflation, what was that he talked about? But it was transitory inflation. I apologize, transitory. But right now, I think they're going to finally take that pause, not a pivot, a pause, different P word. Yeah. And then see what happens. I think the PCE, from an economic point of view, that is their inflationary measure that they like to look at. CPI, PCE, good read on what the consumer is doing. And then we'll see what happens in July. Then you have Jackson Hole. So we're thinking pause and then maybe one more hike in the next 6 months before year end, unless the data suggests otherwise. But price action, if you're looking for that, I think we break above 4,200. We probably make 52-week highs of the S&P 500, but we don't run away. We probably come back in the next 2 to 3 months, retest, and are trading at 4,200 again. We are going to churn for a little while, and that's not a bad thing.
How long before S&P hits 5,000?
S&P 5,000, I am not making that call on this show. I have no idea.
Jay, we've been friends for a long time. Make the call. How long?
I think it will happen sometime in 2024, probably before we get that sell in May go away period. So end of Q2 2024, I think.
So in the next year, S&P 5,000. Wow.
Yeah, but how much percentage wise? What are we talking about?
What are we talking about? Average, 8. What's 8 divided by 42?
Yeah, this is not a math thing.
Any math majors out there?
5,000
divided by 42. It's 20%.
Six.
Basically 20% from here.
It's 19%. Yeah.
Yeah. And over a year. Yeah, that's not out of the realm of possibility.
All right, what about Apple? Apple right now, 2.7 trillion. How long before it gets to 5 trillion?
Well, Apple is it's stalling right now. I don't know.
Nice consolidation within an ongoing uptrend.
I know, and a 52-week high on the horizon. Gene Munster Loop just downgraded this morning. It's going to pause. He thinks revenues are going to be light in June. I'm following Apple. Who doesn't? It makes up 7.25% of the S&P 500. It kind of is the market. For it to make a tremendous run up, we're going to see a lot of momentum come into this market, and I can't imagine. It sounds mind-blowing, a 5 trillion market cap, but you look at the company. It is a utility company. I mean, they just churn it out again and again and again. And you need to upgrade your earbuds. You need to upgrade the phone, the Mac that I'm on. These are things that Apple has got a stranglehold on. So one new product.
And think about this. Elon Musk was trying to sell Tesla to Apple, and Tim Cook wouldn't take the meeting. How crazy is that? Could you imagine if Apple would have bought Tesla when they had the chance?
I know, and we keep hearing, 2024 was supposed to be the Apple car, whatever it was. They're not making a car. I don't know why we hear about this, but every 2 years it comes into the news cycle.
How funny is it that Apple keeps crushing it, and I'm ripping them for not buying Tesla? What an idiot this JC guy is.
It's a lost company. How dare they? It's a most valuable company.
If you look at these stock charts, though, something like Apple or a lot of these big cap tech names, they've very much earned some sideways action and some consolidation. You don't really want moving in a straight line too long.
No doubt. And it wasn't that beaten up. It was one of the generals that didn't get hit the hardest last year. As Sam Biggles, shout out to him in the chat, says Apple's up 42% year to date. Yeah, it doesn't mean it can't go higher. Look at NVIDIA, look at Meta. But a consolidation.
Yeah, it's just back to where it was last year, right? It's just in that range.
Exactly.
What are you buying, Jay? Before we let you go, what are you buying?
What am I buying? What am I watching? I'm not buying or selling anything. I'm watching Micron today.
Are you allowed? Are you allowed to trade now? Your situation has changed over the years.
The situation is still being, discussed on this. To err on the side of caution, I don't do anything crazy when I'm with the.
So hypothetically, if you had all the ability to just trade anything you want, compliance didn't restrict you, what are you buying?
Well, what am I buying for my long-term account? I'm putting away. I would own Apple. I mean, these are things I own now. Apple, Google, Microsoft. Yes.
You said Micron. Talk to me about Micron. Where's your head at on this news?
Micron is the one to watch. Watch this from a technical point of view because it had great news with Japan on Thursday. Broke out of a mega base. A nice rounded bottom, lagging the rest of the chips. And where did it go? It ran, 5-6%, and now it's retesting the base it just broke out of on some negative news, a gap. I don't like that. So watch 65 in Micron. That's that area of interest, as our friend Brian Shannon will say. Let's see how it holds today. If it can hold and rebound like a lot of the stocks, look at the retailers, look at Walmart, still consolidating. That had the good news, and it didn't go up. But Target and Home Depot had bad news and didn't go down. So we're seeing stocks continue to consolidate regardless of the news. Micron had a big move. I want to see how it handles this negative news, and then it may begin its climb back higher because it's got a lot to reverse here. That's the one I'm watching. No position, no action.
Jay, I couldn't agree with you more. It's the first thing that we talked about on the show this morning. I love it. If it's holding those pivot highs, I'm in it today. Let's go.
Yeah.
Jay Woods, Chief Global Strategist, Freedom Capital Markets. I dropped a link to his Twitter in the chat, a link to his Twitter as well as in the description. Jay, always a pleasure. Thanks a lot, man.
Thanks, Jay.
Great luck with this show. Good to be part of it. Bye.
Adios.
I can't take no loss. I don't even know what it costs.